Let's start off with the earnings picture so far. Record first half. The second quarter seemed to be picking up from the first. What's your read for the rest of the year?
Yeah, I think, we had a really tremendous first half of the year, 12.9% constant currency growth. If I take e-bags out, underlying growth in this business, 10%. So we're really happy with that. When we look at the outlook for the year, I think momentum continues. We do see some pockets of, I'd call it uncertainty in certain markets, but, as you know, we're well globally diversified, so small pockets here and there. The blended business should still deliver growth, probably in the double-digit range for the full year.
Yeah, you've mentioned China, India are your biggest opportunities for Samsonite. How well do they do? Because, at a time in China, we're seeing retail sales slow down, a lot of swings in the equity market as well.
Yeah, China moves a bit, but we had a really terrific first half in China. So double-digit growth in China. When we look at China over the last few years, it was a bit more moderated, so kind of mid to upper single-digit, and we went into the year very strong. I would say as we move into the second half, I think we'll probably be into the high single-digit range for China. I do see consumers feeling some of the impacts probably to trade wars, which I know is hot on the news wire today. And I do think that has some impact to consumer confidence and sentiments. And we think some of that might be working into the kind of Chinese consumer sentiment at this point.
And when it comes to the Tumi expansion in China as well, I mean, this is the single growth opportunity that you guys have been looking for. How has that expansion?
Yeah, it's a huge opportunity. When I talk about the growth levels for China, that's kind of core excluding Tumi. So our Tumi business, as we acquired a few years ago, as you know, we had 16.5, a little more than that growth for the first half. And I would say we're just getting into stride. So, in Asia and Europe, we're starting to really push the strategy. For the first year, as you know, we're integrating. In Europe, we're integrating right into the start of 2018. So our Europe first half numbers, for example, for Tumi were up a little over 9%. I expect that to really accelerate in the back half of the year as we start to lay the footprint down for Tumi for the rest of the year in Europe. And Asia should continue. Really terrific results in Asia, and we're really starting to open stores in China. As we were fixing Tumi, we were closing some stores. We didn't think they had some of the right stores in right locations. We've done all of that now. We're off to really what we're calling the push strategy to really get Tumi moving. And I might just say the core North America business for Tumi, which was their historic strength, had a great first half too, up 8%, shade more. And, I think that'll slightly moderate in the back half. We saw really strong comps in the first half. But for the back half, I think you'll see this North America business continue to have very good momentum as well. So
the fundamentals seem strong. The last 3 months, I'm sure you've gone through a roller coaster of moves and changes. You abruptly replaced Ramesh Tanwala as CEO after Blue Orca, the short seller, reported and raised concerns about overall corporate governance, his resume, and of course the connected companies' links with in India with his family businesses as well.
Yeah.
The company has rebutted these comments, calling the report one-sided. Just how misleading were they?
I think if you understand our business, you'll realize that the bits of relationship we have there, a connected party transaction, particularly in Hong Kong, are thoroughly disclosed. So, and they are at arm's length transactions. So I think a lot of the noise around connected party transaction was highly misguided and incorrect because it's very transparent in Hong Kong, and we've been very transparent in that reporting. So we've, when we think about the Blue Orca report and how we responded to Blue Orca, we had a very concise response. We didn't address all the topics because a lot of them really had no real merit. They were just incorrect statements in the business. And I think if you look at our first half results, you'll get a sense for the performance in this business. This business did not miss a beat off the back of the last 3 months in Blue Orca. The business continued to perform very well. I think we've dealt with it in a very concise way. In our view, as we've kind of moved on from the short seller attack. And
when it came to your predecessor's background, why did it take a short seller to bring this issue to light? Internally, were there any questions that were raised before any of this to prevent this from happening?
I think we have a normal process. We were a bit enlightened, too, on the back of some of the noise. And it really goes back in time, some of the noise of Ramesh's credentials pre our IPO timeframe. And Ramesh resigned in the midst of this, so we kind of were paying attention to what was happening. But Ramesh realized that some of these topics from the past were a bit of a challenge. As you know, we never represented him as having a PhD in our public documents, but we were a bit surprised too with some of the what I would call earlier history misrepresentations. So
I'm sure it's brought some soul searching for Samsonite, not just with what happened with Ramesh, but just about the balance sheet overall. Blue Orca, I just quote here saying that the company had concealed slowing growth through debt-fueled acquisitions, massaged earnings, and inflated margins. How have you reflected on that? What processes or kind of checks and balances have you added?
Yeah, well, I think that's where a lot of the misguidance and kind of incorrect statements are. When you really look at the underlying growth of our business, and if you just take a 5-year view on growth in this business, our CAGR growth for the last 5 years is 17.5%, and that's with acquisition. If I look at core growth in that same time period is 9.5% growth. So, this business has underlying growth. We're fueling our strategy with both our existing core brands, but also layering in brands that we think make a big difference in executing our strategy of a multi-brand, multi-channel, and multi-category business. And so when you look at the tactical acquisitions we've done, it's around executing certain price points. So Tumi allows us to play at the top of the market. They have a very good mix of two very good mixes, direct to consumer. They're slightly higher. They had a very good run with e-commerce. We're learning a lot from the Tumi team on that side. And they also had a very good travel, non-travel mix. And
so you're not making any changes or kind of checks and balances?
No, if anything, we're taking a lot of the learnings from Tumi and applying it to the rest of our business. So when you look at things like our Women's First initiative, where we're really pushing products geared to female consumers, Tumi had a very good and continues to have a very good run rate. We've just started to apply that to the rest of our business with very good early success as well. So we're really fertilizing both businesses with our knowledge.
Okay, moving forward, how do you take the company forward now? Do you follow the continuation of the strategies that Ramesh had laid out, or is this kind of a time for a fresh start for Samsonite?
No, I would say, I've been in the business for 11 plus years and CFO for 10 years. I'm very integrated into the strategy. So it's not, one of the advantages of me stepping into the role is that I've been very integral in executing this strategy. And so when we think about the transformation of the business from when I started largely a one-branded business to where we are today with, meaningful mix of brands, meaningful category expansion, and a mix of a business that's pushing a little bit more direct to consumer versus wholesale. That's all part of the strategy that I've been very involved in for the last 10 years. And I don't think it misses a beat. We've got a really terrific decentralized management structure in this business. So we think about how we run this business. We have super powerful regional presidents that really understand their markets. Underneath them, very good country managers, all executing against this strategy. And we've brought to bear some tools for them with brands and category expansion that they continue to play against the market. And I think it's a very sound strategy, and you'll see us continuing to push that. I would say I'll be focused a bit more, maybe a little bit of kind of by nature with my finance background, really getting the balance of sales growth and operating leverage expansion over time. And so as a business, I'll be looking to deliver, a very sustainable growth story and move our operating profits or net income at a little faster pace than earnings growth. And we know that's there. We can see it in our models. I think everybody's expecting us to do that, and I'll be putting extra emphasis on that with the team. So
we've talked about moving forward. Obviously, we're looking ahead to Q3 and the rest of the year. Trade wars, I guess, these trade tensions seem to be improving when it comes to the North American hemisphere, but China still remains kind of the big elephant in the room. I guess luggages have always been facing tariffs before. You guys already faced that 25%. What would the potential hike of tariffs mean for Samsonite?
Well, I think I would view tariffs as one of the cost components in our business. So the blended tariffs for our U.S. business today is 20%. As we watch closely what's happening, the reality is, what will happen if we saw tariffs actually work their way through is it'll impact the entire industry. So when we think about kind of the luggage and bag industry, most businesses are sourcing from China. Today, we outsource 85% of what we produce. 75% of that is from China. And the real infrastructure for kind of the bags and luggage industry is there. And so this will
Would you consider moving that
Well, we're
further?
naturally doing that, but it's not tariffs that's causing that. It's a natural progression for a business to move kind of its sourcing as it's watching cost. And so China over the last 7 to 10 years has been moving, costs have been moving up. And so we've been shifting our business to markets like Vietnam and Thailand. That will continue. And I think if I took a medium to long-term view, China probably works out to be 60 to 65% of our sourcing versus 75. But the real infrastructure for this industry is sitting there. And so if we do see some tariff increases, it impacts the industry. The tough part with that is consumers will feel that.
So you're willing to raise prices?
I think we'll need to, and I think the whole industry will need to do that. And But we'll be doing that in a way that we always manage costs. We'll be trying to optimize the impact to consumers so that it's not as dramatic. We can kind of manage other components of our sourcing engine to try to minimize the impacts to consumers. But tariffs at a certain point is just another cost component within your sourcing structure.
Real quickly, you had plans earlier in the year to open a factory in the U.S. What progress have you made on that?
I would say we're evaluating factories, so we didn't have plans, and so we're evaluating with some of our Chinese suppliers and Taiwanese suppliers. They were actually considering kind of moving manufacturing there. I would say we're still in very early stages of evaluating. It's not totally clear that that works for us. There's very little infrastructure within the U.S. to do that, and so I don't think you'll see that in the immediate term. I'd rather focus our sourcing strategy around shifting to markets within Asia that are better suited for this and have some manufacturing in place already. So in the U.S. we'll evaluate, but I don't think that's going to happen anytime soon for us.